right. So good afternoon, everybody, or not afternoon yet. My name's Daniel Hughes with Bayport Lending. I'm a mortgage broker and also the host of a new starting podcast, video series, everything and anything that I can put under this umbrella, I will. So it could be quite a few different things. Um, but today I have a guest with me who is Pam Marin. Pam Marin is a loan originator here in Florida with me. She's works for a company called Innovative. She's out of the Tampa Bay market. I've known Pam. How long have I known you, Pam? We're going on
6 or 7 years.
So yeah, it's because I met you at FAMP.
Mm-hmm.
And so over the years working and talking to Pam, I have learned a plethora of things. Um, Pam is had a would you call it a niche? Would you call it a
The down payment.
yeah, just I mean, you've been in that space for how long have you been doing down payment assistance and troubled client, whatever you want to put them in? Where how long have you been in that space? You think you've
Mm,
mainly focused?
Probably 14, 15 years. The short sales, it started with that, but now down payment assistance, it is more because of down payment resource and down payment connect.
And so you're seeing, over those 15 years, you've seen yourself adapt and change to this type of environment, right? And, at one point in time, maybe after 2005, 2008 era, you're doing a lot of, like you said, short sale or modifications, maybe. You were doing that type of space, which we don't see a lot of that today, right? We're not seeing a lot of these foreclosure problems, short sale problems, not as much as you saw 10 years ago, right? Or even further, 12 years ago. So today we want to talk about down payment assistance. I think that's the new era of clientele that needs help, right? A lot of borrowers are in a position, credit wise, they're good. They make the income, not even have a lot of debt. I mean, I feel like I see a lot of clients that don't have a lot of debt, right? The number one problem is what? No money.
Mm-hmm.
So, I mean, is that what you feel too, Pam? Like you're seeing these clients that are qualified in many other ways, but just don't have the money?
I see yes, I do, but I think that we do see the ones that if they could get that 620 up to a 640, it opens up a whole nother range of DPA that is not available at 620.
And that's kind of what we're going to talk about today is the varieties of down payment assistance. Down payment assistance comes in so many forms. You have clients that could fit into one box for one type of program that could not qualify for another type of program. And that's what we're going to go into today for a little bit is deep diving into these programs and the differences and the nuances of them. These programs, credit score, product or property type, how much money they make, income limits. I mean, there's so many parameters that you have to check mark and you want to make sure, am I putting the client in the right one? Right. And so
Mm-hmm.
it's what we're going to dive into. So I'm just going to kick it off. I think so. Also, for anybody that's watching or going to watch, Pam and I are both in the wholesale channel. And that's not saying anything about any of the other channels. It's just what we know the most of. So we're going to talk a lot about what our wholesalers are offering and doing, a lot of what the buzz is going around with DPA. But a lot of this will overlap into other channels. If you're a retail lender, maybe you work at a bank, we could go into CRA funds, we could go into the bond programs, which you're going to hear about today. So there's going to be stuff that does overlap into it. But I think a lot of what Pam and I know the most of is these wholesalers and how they're treating down payment assistance, which is, Pam, would you say the wholesalers DPA is new? Like, would you consider it new to the market in the sense that we've been overshadowed with DPA for so long that we can't do it? We're not good at it. We don't have access to it. Do you agree with that? Do you feel like that's been the case?
I don't think it's new. I think that companies that could have done DPA and make it more plentiful on the wholesale side, I'm talking about, they chose not to. They chose to get into the non-QM realm for whatever reasons. And now many of those companies are making a change, and they're offering DPA because it is so popular. And I think that the amount of DPA that we have on the wholesale side far, far exceeds what is available on the retail side.
Yeah, and it's always growing, right? It's always in a position of we're seeing stuff added, and that's going to lead into, just this last week we saw United Wholesale Mortgage offer their DPA, which was kind of by surprise. I think for a lot of people, were not expecting that. So every year UWM does a thing called UWM Live, and they bring out a lot of brokers and loan officers and real estate agents and whoever else. And they do usually big announcements. They usually announce a big product at that point in time, which for the last few years, if you've used United Wholesale, they're going to launch something around that time. So that's exactly what they did. They launched this 0% down payment assistance, which caused a lot of buzz. It was a lot of buzz. A lot of loan officers starting to talk about it, which is good because Pam and I, for the last couple of years, have been saying DPA it's important. It's important. You need to know it. You need to know how it works. You need to know when to use it, how to use it. And maybe we'll dive into some of that today of how you use DPA, because a lot of people see DPA as just down payment money to get them in the house. And that is a big bulk of it, right? You would agree, Pam. That's majority of what we use it for. But I'm gonna question Pam a little bit later because I know some of the ways she's used it to structure deals and help clients in other ways, maybe not just strictly on the down payment funds. And so with UWM's announcement, like I said, it brought buzz to the market of down payment assistance and how do I do it and what's good to know, what do I not need to know. And so Pam, first I want to ask you really quick, what was your first impression when you saw the news of UWM and their announcement of down payment assistance?
That it is a conventional product, and we are now getting a huge push of government DPA that is basically throwing off a lot of the guidelines that we've had. Like they'll allow non-first time home buyers, they'll allow DACA clients, they'll allow a non-occupant co-borrower only for FHA, but UWM's was conventional. And there is not the problem. The biggest problem I see with DPA with loan officers is that when you talk about the income levels that are needed for the DPA, they all think the area median income levels are what all the DPA is about. And we all learned this the hard way, including myself, that there's two different kinds of DPA income. There's the HUD DPA income, and then there's the Fannie and Freddie conventional DPA income, which is greater than the HUD income levels. The HUD income levels go by family size, and the area median income levels for Fannie and Freddie are the whole, it's whoever's applying for the loan, and they're higher, and they have levels like the 50, 80, 100, 120, 140. Also HUD does too, but the income levels of HUD are the income levels that we usually see in the down payment assistance, including your ships and your city, and the ones that we're used to seeing. They're lower, and loan officers get burnt when they are thinking, oh, it's an AMI income level.
Yeah.
So I was glad to see the UWM because Fannie and Freddie are making this big push for affordable, and so is FHA.
Yep.
And they're putting their money where their mouth is. They're doing DPA at 100% for those 80s and those hundreds. And not only that, well, anyway, I could go on this all day, but
Which
there's a difference in that income, and we need to make that apparent to loan officers.
And we do, and that's a very important key. When you see these different levels of income, and what Pam is speaking to, especially again, we're here in Florida, and we see that the Florida housing finance is totally different than what Fannie and Freddie say, and their 80% is different than that 80%. So knowing what the two are very important, because that 80% might not work for a Florida state program, but could work for a proprietary program, right? And so
Mhm.
I think that's the big key, is to know where these clients fit based on their criteria, credit score, income, and so forth. And so, like what Pam said, UWM's was great because it's a conventional product. We're so used to it being on a government product, right, Pam? Like, you're using FHA, and so it's like HUD back. You're using HUD limits. We're now conventional. It's a little bit different, and they follow those Freddie Mac income limits because it is an LPA product. Um, and so they also offer the Home One version, which has the no income limits. And that's really important. So you got two variations of this product, and one that if they're a first time home buyer and they meet the minimum income requirements, they're going to go under the Home Possible. And if they don't, so that flexibility already built in is that common when you see DPA? It's not common to have two layers that allow you to, right? If you had a client that was a 620 or a 500 or a 580, excuse me, you got to put them in a whole different program. Whereas this,
Mhm.
you got two levels in the same program that allow you to dictate where your client can go by using the same program, not having to find another DPA.
Mhm.
So it's really interesting that they did that they structure it this way. And so once you saw this from UWM, Pam, and I asked what you first thought, like you said, it's good that it's conventional. Your next thought was, let me look into it, right? You're like, what do they got to do? Like, what's the catch, right? Everyone looks at DPA and says, what's the catch? With UWMs, um, there's a payback, right? So there's, if they refinance or sell the home, there's a payback. Is that common with DPA across the board? Do you think is that the way most of it really handled? Is that if they refinance or sell the home, how does that payback work? Explain that a little bit with some of these. And why I'm saying this real quick, everybody, is because Pam has done a lot of DPA and studies DPA probably more than anybody I know. So she's going to know the answers to a lot of these setup questions I have. So explain some of that payback method, like, and tell me also your opinion on it. Do you feel like it's the best move, or when do you find that it's the best move for a client?
Well, a grant is always the most wanted, and a grant is forgiven after a period of time. Um, there's payback of two dimensions. The paybacks typically, when you let's start with the payment that you make for qualifying the loan. That's one payback. And there's two different ways that's handled. That's either a deferred payment. If it's deferred for at least 5 years, then you don't have to count it in the debt when the borrower is qualifying, which is great. It gives them that little bit of extra room that they don't have to qualify for. And then there's also the payback, second mortgages. And usually the paybacks on the second mortgages are when a client is over a certain income, like when they're over 80% for many cases. I see, as far as the payment being deferred, the great majority of the DPA have the payment deferred. When it's not deferred, the interest rate is higher because you're uh, getting a bonus of being able to qualify them a little bit higher. As far as the dollar amount of the down payment itself, um, obviously forgivables are preferred.
Mhm.
And there's obviously fewer of them, but those forgivables also come with a higher interest rate commonly. So, and you have to to get it forgivable, they'll, there's some that say we'll forgive you 20% a year, or we'll forgive it after 5 years, or we'll forgive it after 30 years if you stay in the house owner occupied. And here's another big thing. If you move out of that house and you rent it out, you want to keep it. When they find out that it's not owner occupied and they do look at the public records for homestead, then they're going to make you refinance it. So you have to ask your clients, how long are you planning on being here? There's a lot to ask. And I think that.
Yeah. And when you say payback, let's kind of go into that. So a lot of people, when they say payback, so people think down payment assistance might be, like Pam said, I'll reiterate, a grant is forgivable. You don't have to pay it back. It's given and it's forgotten about. And then majority of the down payment assistance, even at a state level, is deferred. And deferred is, let's say, 10 years or 5 years, like Pam used. And if they stay in the home for that 5 years, let's say, then the loan is forgiven. It's just kind of pushed out, right? But in the whole time, there's a second mortgage sitting there that if they sold or refinanced at year 3, they got to pay that money back. But there's also that one where you said payback. And I don't know if a lot of people understand, because that one you'll see two variations of a down payment assistance where, maybe like kind lendings, right? You had one that can be deferred and you have one that you have to pay it back by having a second payment, right? That's getting calculated in.
Mm-hmm.
Most of the time it's a 2% or 1.5% or some type of percentage above the first rate, right?
Mm-hmm.
So you got to calculate that into your payment, right? And you got to have that client qualify for that. So you got to be knowing what these two are. So when Pam says DPA that's paid back, you could be having a second payment added onto that for the DPA, right?
Mm-hmm.
And so something to be very cognitive of to say, hey, I'm putting them in a deferred down payment assistance. Deferred just means it's going to be forgiven at some later date if they follow this criteria.
Mm-hmm.
Right. And so I think that's very important because, like what Pam said, you got to look at your clients and you got to say, how long are you going to be in this home? Here in Florida, we had Hometown Heroes. And a lot of people used Hometown Heroes, which is a great program. And it's almost similar to, what UWM is offering, kind of a structure that they can get up to 5%. And that money can cover a slew of things, which we're going to go over here in a little bit. But the catch is, if they ever sell or refi the home for the entire life of that mortgage, ever, that money's got to be paid back.
Mm-hmm.
Do you think we're in a level of home prices have kind of tapered off? Maybe some markets come down. Do you think you're going to see people in a negative position because they took DPA?
Well, DPA on government and conventionals can go up to 105% combined loan to value. But what we are seeing more of now is that they're going to lower combined loan to values, like 100 or 101. The kind is 100. The UWM is 100. So what you then have to look at is, okay, if they can only go to 100, do they have the money for the closing cost? And like you've said, there's programs that you look at that the only way you're going to be able to use it is to get seller concessions. So if you want to pull back even further and really investigate down payment assistance, you've got to have that block of, okay, these are ones that you're going to need to go borrower paid versus lender paid, and therefore you're going to need more seller concessions, or does your borrower have the money for the closing costs, or do you need to have a seller concession for that? So they take mind work up front to put them together. But here's the deal. If you're in an area and let's say you've got 15 DPA in your area between the ships and the cities and the wholesale, you've got that that's your area. Yeah, it does take a little bit of time to spread that all out and say, okay, you know, if they don't meet this criteria, this loan over here, they'll meet that criteria. Usually what we're finding is that, like you said up front, other than needing to bring a minimum score from a 620 up, I do see a lot more people going after DPA that are very well qualified and have good credit scores.
Yeah.
And the biggest problem we were having is some of them were first time home buyers or their income was too high. And why should that be an issue with your income not being high enough to get DPA? If you don't have the money in the bank, you can't buy a home. You got to get it somewhere.
Mhm.
So I'm glad that these new programs are coming out that don't have a cap on the income, and they're, we're able to reward people that have got higher incomes and have kept their credit in good shape with DPA. That being said, yes, you and I are both seeing it. Maybe it's more prevalent. I think it is more prevalent in Florida, where we're seeing, I felt some overly inflated areas kind
Oh,
of
for sure.
settling down. That's not negative about, it's just that I
It's
just
just
bought
the
a
nature
house.
of the market.
Oh my God. Huh?
Yeah. It's just
You
the
know,
nature of the market.
yeah. And, between to make, we're trying to make owning a home affordable for everyone. And I think that we do need to be concerned that we're going to be at 100% of the equity. But you know what? When we were in the housing crisis, the Treasury gave money to the states that were hardest hit, and Florida was second from the top.
The hardest
And
hit
the
fund.
state used that, and they said, okay, if you're making your payments on time and you're underwater, you can refinance that first mortgage and we'll let you keep the second in place, and you won't have to not be able to get a refinance because your first and second exceed the maximum combined loan to value for a refinance. In other words, when things are that tough, the government usually is going to come up with a program that is going to make it workable for people that have uh, that have those issues. And it's primarily programs that are workable for the Fannie, Freddie, the FHA, the VA, not the portfolio so much. So
Yeah.
I'm less worried about that because we did a pretty good job with the hardest hit funds with that
And I
after
don't,
they figured out that these people weren't going to be able to get in a better place with the refinance.
for sure. And I don't think, and I think that fear for people, we heard that even on our call last night that, you got people that could possibly be going in a upside down position, which I mean, again, I'm only speaking from Florida and the markets that I know is that, the equity gaining is still there. Maybe not as much as we've seen in the past, but homes are still appreciating in value. They're not doing what happened in 2008. And I think that fear for people needs to kind of, be subdued to the fact that we're in a way different type of market. And, we're just in such different times, and equity positions in homes are bigger than they've ever been, right? And so I think what we're starting to see, and right now in a time like this, prices are dropping a little bit. So if somebody's getting the home at a price that's what it's worth, right? They're not, 2 years ago they were going 5% over asking price just to get the home with 15 other bids on it. That's
Mm-hmm.
not the case today. And I want to go back to the seller concessions. That's so important, because we're covering most of our down payment covers their 3.5% if they're doing FHA, or the 3% if they're doing a conventional, or only 2% if you're using the 2%, 1% programs that some lenders offer. And then you have some programs like the Hometown Heroes and some of the state programs that will go up to 5%, where they can cover different fees. But getting that seller concessions helps cover that. Where, I mean, Pam, how many instances have you had where the borrower's bringing in less than $1,000, less than their EMD, right? They're bringing in almost nothing. And some of the, and people are like, that's not possible. No, it's possible. If you get the seller concessions on top of the down payment assistance money, your clients could walk to that closing table. I've even seen it where they've gotten their earnest money deposit back
Mm-hmm.
at
Mm-hmm.
closing, right? So it's very possible to structure these deals up front to where your client's coming in with barely nothing. I think I have one right now. She's coming in with like $2,000, which was her EMD, which, you know, by the time we balance might even be less. So it's like, you know, you got this to the point where they're able to get into that home, and these people are well qualified. They got the jobs, they got the credit, everything checks off. But we're in a time, we're in an era that it's expensive to live. You know,
Mhm.
wages are, you know, this is not going any political path. It's just the time we're in. Wages are not matching what costs are. And so people are living in a very deficit manner to where they have to always be spending their cash on necessities. Well, home's a necessity. Just because they need a little bit of help does not mean they're less of a client. And I want us to get that stigma out of our industry. Clients are not less looked at because they're getting down payment assistance. Pam, I'll never forget the story. You told me of a doctor, right? You're like, hey, I'm helping a doctor, somebody who makes very great money, use down payment assistance and to get into a home. And people
Mhm.
are like, well, you can say what you want. You can say that they don't budget right. They don't say, you can put whatever criticism you want on that person, but there was still a need, and that need was met. And you met that need by using down payment assistance, knowing the programs that had different income limits, right? You got some that
Mhm.
go 40% of the area median. And that's what I'm trying to say is people look at clients as lesser because they're taking this assistance. They're not. Most of
Mhm.
these people, you're the ones that are going to be, you know, cleaning your teeth at the dentist, your nurse when you go into the hospital, the doctor that might be doing the surgery on you. It doesn't matter who they are. We're filling a need. And that need, I think, and would you agree, Pam, that that need is higher than it's been in the last few months than it has probably in the last few years?
Yeah, we are definitely in a need in atmosphere. There's two needs in, or there's two ways you can go in the mortgage business. There's either everything's fallen off the shelf because of desire of just wanting to get a house, or people are in need for something to get that house that they need. And we're definitely in a need time, and which requires that loan officers need to really think about this, as if a client's coming to you and you've counseled them on, okay, your combined loan to value is not going to be as low as if you got a gift from your parents that you didn't have to pay back. But you know, I'm finding clients are pretty savvy with what they're doing. They're looking at, well, I pay rent here for $2,400 a month, or I get a mortgage for 2,000, and I need to do this for my family.
Mm-hmm.
Um, so you can counsel them and make them aware of this, and we've seen it before. And you know, we I think that people are weighing those options before they even come to us.
And yeah, I mean, there's a lot. I mean, especially with the day of the internet, there's so much information out there, and that's like, you know, something we're going to talk about at the end is how you put yourself out there for these type of programs. But before I move forward to the next section of what we're going to talk about, let's kind of talk about the money that we get. Let's use a 5% down program. Let's use Hometown Heroes. So if you're in Florida or you do business in Florida, you've probably heard of Hometown Heroes. It's being funded July 1st. That's the wave that everyone, you know, the money's coming back. That money's going to go quick. That money, that 100 million is going to go fast, probably within 6 weeks, and maybe even less, because I think everybody's loading up.
Mhm.
Clients to loan officers to real estate agents are just loading up and saying, you know what, hold off, you know, a couple more weeks, because once that hits, everyone's going to be hitting that lock button trying to guarantee their money.
Mhm.
So, but with Hometown Heroes, you can get up to 5%, right? And
Mhm.
so that money can be used not just strictly for the down payment, it can be used for the closing costs.
Mhm.
So, I want you to explain, Pam, a little bit, because I know how you do it, and I'm just doing this for the audience, is how have you used some of that money, not strictly towards the 3 or 3.5% down, or maybe even exact title or escrow or any other closing costs? give them the examples that you've used, like maybe with MI and some stuff like that.
That's commonly okay. The hometown heroes is typically going to cover their closing costs.
Mm-hmm.
Um, I'm sorry, their down payment, and then anything extra is going to go to closing costs. So you're looking at, typically on an FHA, they've got an extra 1.5 towards closing costs. On a conventional, they could have as little as 3% of a down payment and have a 2% go to their closing costs. Where you see the real big use of the down payment assistance really helping people is when you get into your ship dollar amounts, where you've got 25,000 or 40,000. Even in Pinellas, they'll give up to 75,000 in down payment assistance. And what you can do is you can give them more of a down payment and lower their mortgage insurance. If their credit score is good, that's the first place I start, is lowering their loan amount to get their mortgage insurance lower. And obviously, the better the credit score, the better that MI is, or totally not having MI at all. But I also use it to do buy downs. I use it, and it's ship money, because ship in the cities give more money than the 5 or the 3.5% that we're all used to seeing. I can buy down their rate in some cases. Now, some ships don't allow a buy down, but that's the importance of knowing your sphere of where you're doing business and what those little thresholds are. I have a hard time competing with builders because they're always giving a great rate, and they're giving, a good chunk of money towards, maybe not down payment, but towards things for the house, which people in new homes love that. They can get all the little things that they really wanted in a house. I have been able to get those builder loans when I use the builder's concession and I use the ship, unless the builder knows how to do the down payment assistance. And for some reason, builders don't always use the ship or the down payment assistance that's right there in that community. Some of them do, but many of them don't. And so the way that I could use their money is I'd still have a benefit, because I could get the lower MI, or totally take off the MI by using all the ship to lower their loan amount. So it's just, when you start adding up the money you can get for these clients, the builders are the best. It's the best way to use to compete with the builder, but it's also the best way to give them a lower payment where MI will approve it. I'm sorry, the AUS will approve it. So there's a lot of looking at that AUI and the AUS and seeing what the threshold is.
Yeah, I mean, the buy downs are so popular right now, and I love that point of the builders. You don't really think about that. A lot of people are in our industry are like, the builders are hard to compete against and hard to do. Well, if you guys didn't catch what Pam just said, this is an avenue, knowing what's in your counties or in those areas, to utilize to match that incentive, and sometimes maybe even be offering a better rate. There's so many other things, or taking that money and utilizing it that's better for a long term. A lot of the money that the builders give is, like Pam said, maybe to upgrade the cabinets or redo the floors to a nicer whatever. But in the long term, wouldn't you want to have maybe use it to do a split MI payment, or to have upfront MI and remove it completely, to have a 2-1 or a 3-2-1 or whatever type of buy down that you're doing, a permanent buy down, being able to switch them to a lower term, buy more of a house because now their DTI is lower and now their approval method is a lot higher. And that's what we want to help with loan officers and tell them, is that there's so many ways to structure a deal once you know what down payment assistance can do and what it can go towards. And that's what I'm about to do. I'm going to share my screen here in a second. We're going to show a tool that Pam, she said even last night, she's in it hours, day in, day out, knowing what these programs do. And that's what we're going to kind of teach is how to read these programs and how to use it in your business, how to market towards it. So it's really important to know that DPA isn't just for the down payment money always. Knowing what those programs can be utilized for and how to structure a deal can really set you apart from that next loan officer, and even builders, right? Again, it's not that we're picking on builders. They are a very competitive market. But Pam, you've run into it too, where builders can't get that client approved going through FHA, total scorecard, or something of that. They can't get that person fully approved, but they put it in Pam's lap, and she's got AUS approval, and they're closing in the next couple of weeks. And so that gives you an outlet as a loan officer to learn and to go pick up that business, right? All we're trying to do is for you to find other avenues of business. It's not that you're going to be 90% of your clients are DPA or you're doing this or that. It's really to just think outside the box of, well, how can I get into that side of the business, or how can I pick up a few deals from that side of the business, DPA or builders or whatever. And that's what I want to share. So let me go ahead and share my screen. We're going to go into how do they find all this, Pam? How do they, right? We're going to talk about how do they find out where this DPA is, who's got it, who's offering it, what are the parameters. And Pam, am I right? You say you spend how many hours a day are you in Down Payment Connect?
I'm in Down Payment Connect every day because they've got updates, and I'm usually comparing. So and a lot now I'm comparing. Okay, the programs that don't have an income cap, because I've got great clients, but they're over the cap of the programs I know in the area. This is your main sheet now, and look at that, 221 DPA programs in the state of Florida.
Yep.
And if you compare that, here's one other thing. I don't want to. You keep going on this.
Going, Pam. No, you're good. I'll follow along. Keep going because you're the expert in Down Payment Connect. I just want to show them how powerful this tool is, and we'll open up some of these programs. But I also want to show them how they can use this to market other areas, and how important this tool can be day in, day out for you. So no, keep going. Keep telling them what you're looking at.
What you're looking at here is a snapshot of what you go into when you hit one of the links under the DPAs that you see on the left. That's part of it. But they tell you if it's a second mortgage, a grant, which is forgivable right here. If it's a first and second combined. I mean, this is at a snapshot. You see this. You see the dollar amount you can get, the maximum price of the home. It tells you in the little blue circles how many days ago they changed the program. If it is active in the funding status, because there's a lot of programs that are out there that don't have money right now. And that's the other thing. Wholesale DPA is always here to stay. The wholesale lenders are always doing DPA. They became very popular when the DPA from the state ran out, and we, the wholesaler, the brokers that use wholesales, we still had it. So that's how brokers got a leg up on DPA.
Let me use my county. I'm down here in Charlotte County. We do this. Pam and I have done this a couple times. So Pam talked about SHIP. Think of SHIP as your state funding money, right? So SHIP in every area. Say what?
It is SHIP, but counties have SHIP.
So exactly. So the money's coming from the state to the county, and the county dissipates it out, puts it out. Well, not every county has SHIP funds. Or they do, and it goes fast and it's used up. I'm in a county currently that does not have SHIP funds. And so what Pam just said is, when one runs out, some people, depending on where you are or who you work for, don't have another outlet. We do. And that's the wholesaler she's speaking of, is that SHIP is the best because of what you can do with the money and how you can structure and layer the deal. And it's the most money, right? But if it runs out, where do you go? And that's where our wholesalers come in, like maybe an Equity Prime, a UWM, a Kind Lend, I mean, AFR, all these. And you'll see these people, if you're a wholesaler or you can broker, you'll see that a lot of what's on the screen right now. I'm in Charlotte County, Florida, that does not have any SHIP funds. Our money has not been replenished in quite some time. But everything else on here are maybe non-agencies, wholesale lenders. You have tribal. So that's really important to know. Equity Prime's a wholesale lender. And so that's really important to know that, hey, SHIP might not be there, but I can still do it through one of my partners. And Down Payment Connect gives you all the details. And, so I'm going to open one up. And like Pam was saying, like now that we just picked Alachua County, which is like up in, Ocala, Gainesville area of Florida. But Pam, explain a little bit about, and I'm going to call you because you've done a lot of this, but we have up to $26,000 in Alachua County. It's deferred, 15 years forgivable. So meaning, like we spoke earlier, you have to forget after 15 years of living in that home, no refinance, no selling, it's forgiven, right? 0% interest, no monthly payments. They don't pay on this money. So again, you saw 0% interest. Like everyone, when UWM came out, 0%, 0%. Well, that's already been out there. That's not that wheel wasn't reinvented with that program. It's just now a big variety of people have it. And I'm not putting down UWM's program by any means. I'm just saying it's very common to be that way. Community land trust properties are eligible. May use a realtor of choice. Loan may be layered with other DPA programs. How many of you have seen that Freddie Mac is giving up the $2,500 or $500 or paying for the appraisal? Okay, imagine you can do that and layer $26,000 on top of that for that client. So you now not only using your lender's program, right? Maybe I'm now giving them the Freddie Mac program, and now the county SHIP is layered on top of that. Pam, how many times have you seen loans you've layered at least 2 or 3 times using assistance?
I've only done it once because the Borrow Smart and the SPCP you really need to follow the guidelines for them. I try it on everybody, but I know SPCP, it's the area they moved from, and the Borrow Smart is the area they're going to plus their income, and they're typically below 80%. So, but it helps quite a bit. That money can be used to buy down a rate. So,
look at this.
Repairs.
Property repairs. Right? So if I'm now doing a 203K with down payment assistance from Equity Prime, because you can do their empowered DPA 3.5% on a 203K. Now, if it's allowed, if their program allows it, stacking this on to add to that repair, right? And this is the level, and Down Payment Resource is the tool to find out how all this works, what programs allow that. And I'm going to show you how you can filter some of this, but I just want to show you the level of detail that you get in these programs. You can see what Pam just talked about, the special purchase credit. It says no. It's provided by a municipality. Is it bond funded? No, it's through SHIP. Eligible channels are retail. So you can't do it through the wholesale. Okay, that's fine.
Actually, that one, yes, you can. Is that Alachua?
It's Alachua. So I was going to continue how you can actually still tell them how. Let's pause right there. Pam, you're a wholesale mortgage broker. They read this and it says retail. How are you?
That is. I know that one is available because I've gone to the class for that, and I wouldn't have traveled up there if I couldn't get it. What happens is that This is something that is asked of these ship programs. Do you allow wholesale? And a lot of the ship places do not know what the difference is between retail and wholesale. So I know that one has it. If you see ship and then you see an eligible channel and ship is not on there, it's usually because the people they asked are saying no, they just do retail because they don't know the difference.
Great. And that's what I wanted you to say. They don't know the difference between a broker, a direct lender, a retail lender, or a bank. Like they don't distinguish that all the time. So I'm glad we pointed that out, because somebody might look at this and say, well, I can't offer it. Don't. The number one thing that we can tell you to do is right here is the contact of that provider. Call that provider, tell them that you're a lender, a broker, whoever you are, and ask them if this is available for everyone. Ask them the criteria, and they'll tell it to you. They even have web pages that break it down. But that's why I wanted to point that out, is because when you see retail, it's not always, it's just for banks or somebody that's a retail lender. That's not the case. And then this one, I'm going to not spend too much time going down, but you can see how they break down the assistance funds and what type of approved first mortgages you can do on a Freddie Mac, Fannie Mae Home Ready, FHA, VA, USDA, right? So now you can see how you can maybe a USDA 100% financing with this money, or a VA renovation loan with this money. I mean, there's so many things you can do with DPA. This one has the 15-year repayment, repayment triggers. If they sell the home, change the occupancy, transfer the title, pay off the first, default, or cash out refi. So again, you can go through down payment assistance and see what the criteria is for the program and how you find these programs. You might be in an area and say, well, I don't know what's available. And that's exactly what these filters are for. You can look up exact counties. You can do these filters approved. That I'm not going to go over that for a second. Provider types. Is it from a nonprofit, from a local city? And sorry, I'm looking over here on my screen because that's where it is. What channels? Retail, wholesale, correspondent. So you can do all these different types of filters so you can pinpoint a program. And that's what's really important about Down Payment Connect, is you don't have to know what's available all the time. You can see how often they are updating these programs. Down Payment Resource entire model is based on providing all. This is nationwide, everybody. This is you can sign if you're licensed in Tennessee, Washington, Florida, Georgia. You can have Down Payment Resource and Connect for all those different states. And you can find out. So if I'm licensed out in Texas and I want to know what's offered in Houston, Texas, I can get Down Payment Resource for Texas and look up those programs. Right now you're seeing Florida because, like I said, Pam and I are in Florida. And you see that here's my Charlotte County ship that I was just talking about. No, it's not funded right now. There's no money. I don't have access to ship. Now I got to go to my other lenders. And that's what, look at Bay County. Look how much some of the Broward County, $80,000. Look at City of Boca Raton, $150,000, right? We look at something like this, Boca Raton, it looks like it's out of money, but there could be high net worth people there. 95,000, 70,000. When people say there's no down payment money, they're lying to you. They're lying. It's there. It might not be funded yet. You might have to find a different avenue, but Down Payment Connect will show you what's there, and it's there. And imagine what you can do for some of these people when you get them these types of funds. The city of Alachua will go back to that $26,000. I'm not in Gainesville. Pam, you're in the Tampa Bay area. What's stopping us from just going and marketing in Alachua County about this program?
Nothing. Except one thing, Alachua, and I'll give you two, Pasco County and Alachua, you as the loan originator and the realtor that helps a client, also at City of Tampa and Dare in Tampa, you have to be go through their class first before a contract can even be written. And that just sticks out to me on that. And by the way, there's when that very first page that you were on that lists all of them together, to the very far right, you see approved. Those are the programs that the Down Payment Connect gives me a landing page. And when somebody comes in to look for down payment assistance, all of the ones that say approved are the ones I can do. And I know I had to get training from Alachua County first, but what and you don't need to go back to this, but yeah, this is what the borrower sees. They fill out their information, if they have an exact address or if they're just looking in a city or a county. They fill this out, and then over on the right where it says programs, that thing shows them the number of down payment assistance programs in their area. And guess what? Here's another thing. This is the coolest. Realtors have Down Payment Connect, which is this system you're seeing right here with the little green book in the blue and green book in the left. That's called Down Payment Resource. That's the national database of all down payment assistance. Your realtors have this for free, but here's the difference. They don't have the wholesale DPA. So you saw at the beginning, I think it said 212,000 DPAs. I'm sorry, 221 in the state of Florida. That's including wholesale. If you go to the MLS where the realtors have this for free, they're only going to show the retail down payment assistance, which is substantially lower than the down payment assistance that has wholesale for brokers. So this is a prime tool to use to connect to realtors too, because they've got it and they don't even know they've got this gold mine in their MLS. It's not in all MLSs, but it's in my MLS. It's in yours, Daniel.
It's in the
It's
biggest.
not in
It's in Stella. I'm thinking of the beer. Stellar. And so Stellar is the largest MLS here in Florida, and they're adding too in other states too. So Down Payment Connect. But where I was going from, when these programs, you can put this landing page on your website, in advertising, anywhere that you can put this, and the client fills this out, and then it becomes a lead. Then it comes back to you as a way of looking up these programs. Once they try to get the details, they got to give their contact information. And now you have a lead to work and look up that Down Payment Connect, and you can go back to your directory and give them the details. Before you talk to that client, now you have every detail of what you actually need for that program, right? So the city of Orlando chip, now, if that's where they're at, I have every detail I need about that program. And that is key. So when you go back to that client, you're already prepared. And guys and girls, there's so much out there. I mean, I think I just touched the surface level of it, whereas this can get to a level where you know these in and out. And if you're the one to know it, because right now, I'm going to take a minute on this. I said this earlier. So many loan officers, we heard it last night, Pam. She's like, I don't want to do this anymore because I'm scared of this is going to happen. I'm going to get burned on this, or they take longer to close. We've heard all the excuses, but it's not that way today. It's not the way how down payment. A lot of these down payment loans, especially with certain lenders, you don't even know they're doing a down payment assistance loan. They're underwriting it all in-house. Mm-hmm. They're putting it all right through one underwriter. So you're not having to underwrite the first and then send it off. Now, again, you still might have to do that with certain programs. That happens, and that's okay. But the way speed thing is you can underwrite the first in a few days and send it off to the state agency and have it approved in a couple of days. I mean, it's not what it used to be and take as long as it used to be. And so that stigma, I want to just keep harping that we got to get out of our industry. You guys and girls can see how much money is, and we're only looking at Florida. We haven't even talked about other states. We're only talking about Florida. And you might look at a county Like I said, it doesn't have money, but look at the city of Orlando. That's $45,000, right? And it's deferred for 10 years and 0% interest. And I mean, look what you use Realtor. Look at all the stuff you can do with this money. That's a lot of things you can do for your client. If you don't know it exists, and I do, what am I, or Pam does, she's going to market to your client, and she's going to market to your market as the DPA expert to know what she can and can't do with this program. And if I can propose to a client using this money and benefit them a lot better, it's not always interest rate, folks. It's not always I have the best interest rate or I have the best this. We all are playing in the same sandbox. It just matters, how do we use that sand to build what we need to build for our client? And that's it. And that sand might be the rate buy down. It might be the upfront. Look at upfront mortgage insurance premium guarantee or funding fee. So if I'm doing a VA loan and I can finance the client less $10,000, do you not think that's a benefit for my client? I'm going to drop their payment a little bit. Now that, right? These are the things that we want you guys and girls to think about when you're looking at down payment assistance. It's not just, well, this client has no money and they're not going to be able to buy a home. I bet you'd be surprised if you just take a little bit of time to dig deep into them. And the other part of that is some clients come to you not know what they're going to do or even know about DPA and might not think they can even get it because they make too much money or they're not into that level of business. Well, that level is gone. I think a lot of that is gone. Like you're seeing the AMIs be higher. So when you look at this, this money, in this right here, still, you might not get the full 45 because that's for extremely low. And who's going to qualify that? These questions we could debunk all day. There's people out here and there's cities out. They wouldn't put this money out here if there wasn't a need. Trust me, these agencies know enough data to know that somebody's going to be able to take advantage of that $45,000 because they're below the 30% AMI and the 50% AMI. They wouldn't put that on there if they knew it wouldn't help somebody.
And
But
you
for
know
the rest
what?
of it,
AMI just went up on the 19th.
yeah. So, but 20,000 for 120% AMI and workforce to 140, that's big. That just opened your window to clients this big, from this to this big. Now, when you look at that AMI level, you're now able to say, I can go up to 140% of that and get this client $20,000. I think $20,000 goes a long way, even on higher purchase prices. It doesn't matter. So with that, there's a lot of ways to dive into down payment assistance. The best thing I can tell you to do is to get Down Payment Connect. We don't get any referral from this. We get nothing kicked back on this. We just love the tool so much. Sean and Rob over there have been great to us, give us all the information we ever asked. Pam, share with them what you just found out on Monday. And you found it out through Down Payment Resource because of Rob and Sean and their team there.
That you can, there are some down payment assistance. They're typically SHIPs that they have located that will allow a resubordination of the second mortgage with a refinanced first mortgage. So this is not necessarily precluding you from refinancing them into a lower rate where you have to worry about the first being included in. You have to look at the combined loan to value. Yes, but they will in some cases allow you to keep the second for the down payment assistance and refinance the first. The other thing you got to remember is that you close with down payment assistance, whether it's one lender doing the first and the second, or you've got a second at SHIP and a first at a wholesaler. If they close on the same day, and you refinance it, that's considered a rate term refinance if the people want to refinance. So you can refinance that second back into a 30-year first on a better rate if they want to refinance.
And that's important to know because I think some people might be thinking that you have to do it as a cash out. Maybe the rate's a little bit high. You got to hit them with a cash out hit. You don't. It's a rate and term. So that's very important to know. And the subordination is really interesting, right? You don't think that some of these programs will subordinate, and not many do, but there's still a list of them out there, which we had no idea existed until
Mm-hmm.
you reached out to this entity and Sean and Rob and their team over there. And they found out and came back to Pam with a whole list in her area of down payment that will subordinate. That's
Mm-hmm.
huge to have. Now, in my opinion, Pam is here now, right? I'm here because I don't have that list. Pam is now, because now she can structure deals differently than I can. And that is an advantage. And that's what we want to share with you folks, is that use this tool, use down payment assistance as a way to not only grow your business, but to be the expert in your area, but to also, I mean, these clients that you help get into homes and you can keep all their cash in their pocket, or they have no money and they get into a home and they are forever grateful for you. They're your biggest referral partners.
Mm-hmm.
They end up being your loudest cheerleaders from anybody else. I don't care, from real estate agents to title agents to insurance agents, wherever you help somebody get in a home and that they thought they never could, by knowing what to do and how to do it with down payment assistance, you will forever be in their graces and get referrals from them endlessly. I mean, I get referrals all the time from clients that I help, their friends, their family, tag me on Facebook, whatever the case is, they're always supporting me. And so don't count these clients out, and get to know down payment assistance. If you need more information, comment on these videos, send me a message. We'll go deep dive into more of it if you want specific programs. Um, the topic's hot with the hometown heroes coming down the pipe and being refunded here in Florida. I know that's a big topic for us. That's why we wanted to do this call. And we want people to understand that, don't get discouraged when one runs out, that there's more, and to know what's available. Even some instances stack. And so with that, thank you all. Pam, any last words you want to share about down payment assistance, Down Payment Connect, your experiences? What's your last words about this?
Get in there and know those programs. Go to the sessions that most of these housing counseling agencies have. This is just takes a little bit of working on it. Matter of fact, Daniel and I were talking about these little nuances that each of them have, and we're gonna be presenting or have this at How's It Done, but the questions that are not answered on that 6-page document you just saw for each DPA, you get certain questions all the time, like which company can do DACA clients, or do you have to have a class before you can sign a contract? That kind of stuff. That unfortunately, when loan officers start in this, you start accumulating those details. Guess what? We're already starting to do that for you. So we've got this. Here's the next spreadsheet to look at for all the questions that the first one didn't have. And Daniel's going to be putting it on How's It Done when we start putting that together, and keep adding to it.
Yeah, for sure. I mean, the content I think will always be there, and if you have questions, let us know. We're in this day in, day out, like I said, and so thank you, Pam. I appreciate your time. You guys are going to see Pam a lot. She is somebody I work with very closely throughout this industry, and knowing what to do and how to do things. She's a great mentor of mine, and I want to share her knowledge with everybody as well. That this stuff can become complex, but we have some great tools to ease that off. And you have resources. You have people who, we have clients to homeowners.com. We'll share with everybody. I mean, there's a lot of stuff out there. So if you need help, let us know. Thank you if you're watching. I appreciate you joining in. Or if you're watching this at a later date, I appreciate you. Let us know how we can help you. And if there's anything else you need from us content-wise, please let us know. We're always looking for ideas. Thank you so much, and I'll talk to you guys soon. Thank you, Pam.
Thank you, Daniel. Bye-bye.